Hi friends, welcome back. So headline, US inflation falls to 2.9% in July, and you're looking at 3.2% core, 2.9% headline. So if you want to know the difference, core basically removes food and energy. The reason why you do that is food and energy tends to be really, really volatile, obviously you need food and energy in your life. So, you do look at both numbers. Headline is 2.9. The Fed wants to get 2.0, right? Inflation, but we're not quite there yet. However, it is trending in that direction, you can see. And will they make it to that 2%? It's anyone's guess. The thing is, though, is that which makes it hard to get there is Wall Street's really, really asking for rate cuts, right? So even though we're not at 2%, they're like, please cut, please cut. The problem is that if you do that too much, then you're never going to get to the 2%. This is the headline here. Core U.S. inflation eases a fourth month, ceiling Fed rate cut. So already Wall Street's like, and this is from Bloomberg, they're like, see, you got to cut now, please, please cut. And basically, there's a lot of people that took bets over, and they're over leveraged, and it didn't quite work out for them, and they're underwater, and they want those cuts to try to ease that. Again, the problem is it may not necessarily solve the issue with inflation. So there's that. Wall Street wants 50 basis point cut. I think it'll come in either 25 or theoretically Fed could go zero, but the language from them doesn't seem to be that way, meaning they don't do anything. The thing is, it's like historically speaking, our rates aren't that high at the moment. Just that if you've had lower interest rates for such a long time, you'd think that's the norm. It isn't necessarily. We've actually been historically abnormal for a long time. The CPI today, you can see here, the estimates was it month over month 2.2% came in at that. The only difference here, because we came in around estimates, the only difference here was that the CPI year over year estimate was 3.3%. I came in at 2.9. The other thing I want to take a look at is like, where is inflation? What's going on with that? So this is something that CNBC always does every time they do these reports, and it's kind of fun to look at. So juices and drinks, 19.2%. And I think this is year over year. I don't know. Juice and drinks have been expensive for a while. Eggs are also 19.1%. Those have been expensive. Frankenfurters, bacon, right? Beef roads, pork chops. So this is like food, right? And the reason why a lot of people, feel like, well, yeah, I see that the government's trying to tell us inflation's down, but like the stuff you see and you buy every day at the grocery store still remains elevated. And the question is always, has your salary kept up with the prices at the grocery store? Also, too, take a look at this. Your car insurance is still up, so 18.6%. This one I'm not sure exactly why, to be honest. Photo equipment and supplies, photography. I'm having a hard time saying this, but camera stuff, right? 12.6%. Indoor plants and flowers. That one I'm not sure. I don't know. I'll just say here in Korea, plants and flowers, same price as it's been for a while. They're not that expensive here, but maybe in the USA that stuff's expensive. Plants and flowers. So I'll be curious to your guys' thoughts on that. Care for your elderly at home and invalids, 9.8%. Admission to sporting events up 8.8. This is an interesting one. So when we talk about sporting events, I think that's also going to include your concerts, stuff like that. So when you want to go do something, things are expensive. And I've seen prices of, like your Taylor Swift tickets or your NFL games, etc. And I know it's quite elevated. I'll tell you guys, for us here in Korea, prices aren't that bad. So, maybe in the USA, a baseball game, I don't know. I don't know what it is, but we'll just say maybe it's $50 or something like that. Here, maybe you can go anywhere from 10 to 20. It's like half. Or, and I don't know what your baseball tickets are, but I'm just saying it's just not that much here. In our plants, we get flowers every now and then, and anywhere from like $3 to $10, and we can get some flowers. So it's not that bad. Delivery we do all the time. It has gone up in prices, but it's not that bad. But for you guys, up 7.8%. Also, too, let's see here, rent of primary residence up 5.1%. And actually, these kind of things, and you want to look at different categories, but you also understand how big of this part of it is your life. So, for example, the one chart here shows pet supplies. But if you don't have any pets, it doesn't really affect you at all, right? But the one thing that affects everyone, and the one thing that's really driving inflation, is housing. And depending on what numbers that you want to look at, housing, ranges anywhere from 70 to 90% of our current inflation, right? So it's basically the largest part. And then if you, and this is a chart kind of looking at that, and then if you want to look at other stuff like used cars and stuff like that, it's like, well, okay, maybe used cars are coming down in price, but if you're not buying used cars, it just doesn't really affect you, right? So housing is the thing. It's going to be hard to solve. How can you get the price of housing down? Well, if you cut rates, you're giving people more money, essentially. So that's not going to do it. Essentially, I guess what you could do, well, a couple ways. One is you remove buying power from people, right? So if people can't afford to buy a house, they don't have the buying power. Eventually, you would think that the prices would come down. You would think so. The thing is, that's really quite interesting is just the market's just completely slow. No one's really buying or selling at rates that we were before, right? Because the people who are bought a house and they got like in at 2% or 3% mortgage, something like that. There's no incentive for them to sell. So then there's really nothing on the market, right? There's not much inventory. So theoretically, you could build a bunch more houses, right? That would be one solution, or you could cut demand, something like that. There may be other solutions out there, but I'm just saying that those would be some things that you could look at. Now, cutting demand, right? So this is where it's painful. It's just no way around it. But this was the headline today: Cisco cutting 7% of the workforce. Reports earnings and revenue beat for the quarter. So, I mean, yes, I guess they beat Wall Street estimates, but 7% of the people are at Cisco. And Cisco's a pretty big company, are going to lose their job. I think their sales were down like 10%, something like that. And again, this is the kind of stuff that you want to watch. So you're watching inflation, or is it heading to that 2%? And you're also keeping a track on employment numbers. So the Fed, they try to keep the two in balance, right? So Federal Jerome Powell, he's going to speak at Jackson Hole, I think it's next Friday. And the basic gist is like, okay, if we think inflation is coming down to where we need it to be, did we, set rates that they're too restrictive to where companies can't make any money and they got to, cut jobs, etc. So the issue is, okay, if no one has a job, let's just say, for example, half the people don't have jobs anymore, just for example, then suddenly, there's a much less demand, right? We don't have money to buy cars, we don't have money to buy houses, we don't have money to buy food, etc. Prices come down because you got to sell it to someone. For example, the opposite would be, let's say everybody has a job, full employment, everybody has a job, everybody has buying power, right? There's way more demand and suddenly prices would go up. And so this is sort of the kind of, how do you control inflation? This is to see why it's really tricky, and it's painful because not necessarily, and everyone benefits no matter what decision make, right? People benefit differently. So if you cut rates to, for example, to zero, and then suddenly encourages people to like borrow tons and tons of money, and basically inflate prices of everything, then that benefits people who want to do those kind of activities. And then what happens if they make too many bets on, say, over leveraging themselves and rates go up, then they start clamoring, oh, why did you raise rates, etc. And then also too, you have to deal with inflation. So I just wanted to mention this stuff. It's a complicated issue, and there are always winners and losers with this kind of stuff. It's hard to get everyone to win, unfortunately. That's just how the game is played. One of the things that I do think is a disingenuous by the Fed, though, is that, like, for example, Goolsbee, he's like, oh, things are really restrictive right now. I think the language that he was saying. He was saying here, I'll just read it here. It says, Goolsbee said current interest rates are, quote, very restrictive in an interview with Bloomberg, right? So he said that recently. Then he says, when asked about the balance between inflation and labor market risks, it feels like on the margin, I'm getting more concerned about the employment side of the mandate, right? So again, they're trying to keep things in balance. That's their mandate. That's their mission. And then more and more companies are laying off, unfortunately. What's interesting too is, like, and this is from the Wall Street perspective, which we talk about quite a bit, is, companies, in order to, maintain profits, you obviously, not obviously, but you want to give people reason to buy said products, right? So, if you just lost your job, you're like, there's no way I'm buying a product, right? I don't need to buy your new, Google Gemini phone thing. And if you're worried about your job future, then you're like, well, I have the money, but I'm not gonna, take that risk. I don't need it. And then the other thing with this kind of, these kind of companies of technology, it's just our newer phones are so good, they last longer. So Google, they're trying to convince you with AI. They did a demo, and the demo didn't quite work. Let me read the description here. It says, so they went on stage, and it says, things got awkward right after the presenter told the audience, this is Google's presentation of the new AI thing. All demos today are live, by the way. Okay. So all these people are watching. And then listen, The demo failed, freezing up and displaying an error message. And this is the person. Citron tried again with the same result. So a couple times he tried, the demo freezes and it displays an error. After a quick verbal appeal to the quote demo gods and a phone swap, so they changed phones, the third try worked. And essentially, they try to demo the thing, so it took 3 tries to get it to work. So it's not ready. The thing is that these companies that they're trying to convince you everything's about AI, et cetera, but it's just not ready. And it remains to be seen if consumers are going to go in droves to pay extra for a phone. The other thing too is interesting is that I guess Apple's developing new product here. It's going to be some sort of like tabletop screen thing. So this says Apple pushes ahead to a tabletop home device and shift to robotics. It's going to have some sort of arm on it or something. So, okay, I'm showing you guys this. This is actually Amazon's home screeny thing. I don't think this was a success for them. I've never seen one of these in person. If you guys have, you can let me know. It was called the Echo. Meta tried it to Facebook, kind of a screeny thing. I think they discontinued it. But Apple evidently is going to try it, and they're going to have some sort of robotic arm on this thing. They're trying to get their sales up, essentially, is what we're looking at. And remember, I told you guys before, this is a group of people who were not trained by Johnny Ives or Steve Jobs, so they're trying to make a new name for itself. Let's see what Apple's trying to up to. What are they up to? It says Apple seeking new sources of revenue, right? Moving forward with the development of a pricey tabletop home device that combines iPad display with a robotic limb, okay? Why do you need the robotic limb? I guess it's going to move around the screen. I don't think it's going to be like a robotic limb like a hand. I don't think it's going to be like that grab stuff. I don't think it's that. But evidently that's what they're going for. The company now has a team of several hundred people working on the device. So several hundred, you can say that maybe, I don't know, anywhere from maybe 200 to, I don't know, 600 or whatever. You can make the judgment of how many people, which uses a thin robotic arm to move around a large screen. According to people with knowledge of the matter, the product, which relies on actuators to tilt the display up and down and make it spin 360 degrees, okay? So it sounds like you put it in the middle of the table and it'll be able to go all directions. Also says here too, Apple's industrial design team has been exploring tabletop robotic concepts for years, but there wasn't consensus within the company, including the software engineering organization and marketing teams, over whether to move forward. So, they're like, I don't know if we can get this thing to work. And the other people are like, I don't know if we can actually sell this thing. And already for me, so I'll just say, this stuff all determines on pricing, right? If you come in with a decent price, sure, I'll think about it. But, this is the fundamental question. Do you need an iPad that moves around on the table? That's basically what we're talking about. Do you need another type of iPad, a more advanced iPad? That's what we're talking about. Also says here, Apple's marketing group was concerned that consumers wouldn't be willing to pay for such a product. I completely agree. Top software engineering executives, meanwhile, fretted about the staffing resources. Do they have the people it would require to build the necessary software? But Chief Executive Officer, so this was Tim Cook, is seen as a proponent of the device, as is John Turnus, the company's head of hardware engineering. So the top is pushing for this thing. They got to please Wall Street. For this new iPad thing. How much is it going to cost? You guys probably can see right there, but I'll just read it. Apple has now decided to prioritize the device's development, so I guess it's a priority for them, and is aiming for a debut as early as 2026 or 2027. So it's a couple years, according to people. The company's looking to get the price down to $1,000, but with years to go before an expected release, the plans could theoretically change. I'm sure it's going to cost more than $1,000. So, whether or not they can actually get this thing to work is anyone's guess. Again, do you want this kind of screen? And that's sort of what we're looking at here. So the big tech companies are looking to get you to spend more money, and that hopefully please Wall Street. That's their goal. Moreover, you're actually going to get this, more crackdowns in these companies. There's talk that we might actually break up Google, which is really interesting. This is not a done deal. It's just, kind of been leaking out there, kind of floating it out there. Trust me, Google has really good lawyers, but it's theoretically a possibility. You would shake up their ads, I don't know if they would divide Android completely from the rest of it, or if they would divide, say, YouTube. But they're mostly concerned about the Google search and the ads and whether they have a monopoly, and try to figure out a way to make it more fair. I also want to point this out too, going around the world. This is the Japanese Prime Minister. He's actually stepping down, Kishida. Next, it's interesting because this is really, really different than U.S. politics, where if there's a scandal, it's more like, oh, it's all fake news, and you have politicians that like to say that kind of thing, and you know which one. But in other parts of the world, they do believe in shame, right? You know what? I did something wrong, time to step down. It was over campaign financing stuff. And then the guy in the banana was like a professor, just kept pointing out this stuff. Hey, this looks like they're not reporting, properly the money that they're taking, etc. And then it turned out to be true, and the politician steps down. You'll see that in the UK too as well. It's just there's some sort of scandal, controversy, and they just resign. And I know the U.S. situation is just different. It is what it is. Regarding the stuff though around the world is, I have a book called Positive Angle, and sort of, how I keep smiling, laughing about this stuff every day is just, it's your perspective on life and experiences you had. So, if you need a pick me up, definitely check out the book. It's called Positive Angle. It's available on Amazon, but it'll kind of explain why my point of view is more global and different than other stuff that you may see out there. We actually saw the movie Alien Romulus just yesterday. We get movies a little bit earlier than what you guys get. And you can watch our review. It's over on our vlog channel. And I'll leave it out if you're interested in the kind of movie and our thoughts. So check that out. The last thing I want to go over, guys, with you is this one here. This is actually really interesting. Is Wells Fargo was saying, okay, the current rate cycle, if it's going to be like 1995, right? What could benefit? What could not benefit? And we'll read it here. It says there was a period when the Federal Reserve, then led by Alan Greenspan, embarked on an interest rate cut cycle that may have parallels to what the market's expecting for September, and referring to 95, right? So they're saying here, okay, if we get disinflation and a soft landing, maybe this is what we're going to get. And so, nothing's guaranteed. Like they say here, they are similar enough. There are enough similarities that the 95 cycle could provide potential roadmap for corporate earnings and equity prices in the coming quarters. And again, this is coming from Wells Fargo. And this chart is really interesting, actually. You can see this here. So basically they're saying, okay, which sectors, if, the cutting cycle, et cetera, which sectors would benefit. And again, past performance does not equal future results. So just keep that in mind. But they're saying here, financials and healthcare. That's sort of, 18 months from the cut. The basic scenario, I think what you're looking at then is like, okay, and then I think, the real estate's on this chart too as well, is essentially, in my opinion, theoretically, if we are going to, some sort of new bull market or whatever, the idea would be, well, the economy is not going to crash, economic stuff's still going to go, people are still going to invest, etc. So we're good there. That'll get sort of the financials going again. The one issue though, which I would question with this stuff would be, are tech valuations too high? And this doesn't necessarily address that in my opinion. They also show here that like maybe utilities would be a laggard. So the basic gist of that would be is that people aren't necessarily going to retreat to safety. So take this stuff at with a grain of salt. I'm just showing you guys stuff because there's always something interesting to look at the market. And if you're just curious kind of what the market did today regarding inflation, you can see here the losers were Google and Tesla, a lot of green though in the market, and the chips were down a bit. And then around the world, you also had a bit of tech down. So anyway, this is what's going on. I hope this is useful and helpful for you. I'd like to hear you guys' thoughts on the Apple one. I think that's a really fun one. And what are your thoughts on inflation? I shared my thoughts, and I'd like to hear yours as well. So thanks for watching, everyone, and I'll catch you on the next video.